Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday, July 1 market webcast. All right, happy July. What we're seeing, here's daily chart of the ES, and what we're seeing is we're seeing a move off of the attempted conversion of the lower Bollinger Band and all these moving averages. They bounce over the course of a couple of days, and what we're seeing now is we are seeing a test of the daily midband, which comes in this morning right around 30.94. So, I titled this webcast for making some big decisions at the mid-band. And why is the mid-band such a big deal if you haven't been with us very long? One of my baseline considerations about any instrument is whether it is buy dips or sell rallies. The biggest delineator of buy dips versus sell rallies is the daily mid-band, at least for me. Instruments that tend to want to trade below the 20-day or the daily mid-band, and between, say, the mid-band and the lower band, those tend to be sell rally situations. As you can see, those that like to trade above the daily mid-band are typically buy dips, and that's just an overall tape control, longer-term, intermediate-term character of the market kind of thing. So it's made its move down. This tape is still, if you think about it on a relative basis, the bands remain pretty tight. The ranges are big, which is great because you can get a lot done. But overall, compared to where we've come from, the bands are still fairly tight. Not as tight as they were before the pandemic, obviously, when we were just bleeding up every day. But not as tight as they were here before the last run-up. But they are getting tight, and the more we get engaged with the daily mid-band every day, the tighter they're going to get. So I'll be interested to see if this is a 1 or a 2 day deal where we trade it to the daily mid-band, and then either to the downside or to the upside, we put some distance between ourselves and that level. If the answer to that question is no, then expect those Bollinger Bands on the daily chart to get tighter. So compression in a wide range is a good thing. It's basically a trader's market. Becomes, pretty range bound. And then the expansion out of it, obviously, whether it's up or down, makes for a pretty nice move. Hourly chart, and you can see, here's your 20-day. They traded up. They dealt with the 3100 roundie yesterday. They were really flat most of the night. Your new monthly pivot comes in at 30.76.33. And you see the 9-day underneath there at 67. This was the bounce off the 50-day back on Monday. And they had a chance yesterday to fight over the weekly pivot. The Bulls have clearly won that battle. Although something tells me this might not be the last we've seen of the weekly pivot. We may get back there even today. So you've got a whole lot of big areas that need to get decided, starting with 3100 down to the 20-day. If the 20-day wants to be resistance and the Bulls want follow-through, well, then you have to deal with all of this, and then make a lower low versus where you opened it up on Sunday night. We are 100 and something handles off of that. So, it was a gap down Sunday. We filled the gap. And with the exception of a couple, of basically one little blip right here that was bought, it's basically been up. Higher lows and higher highs the rest of the week. In order for the bears to break that pattern, they're going to need some sustainable downside. That has not been their forte. So keep an eye on weekly pivot. As far as numbers off the open, I got a whole lot of stuff bunching up at 30.80. I've got the hourly mid-band, volume-weighted average price, monthly pivot, and our proprietary moving average. So that's all between 76 and 80. So, if this holds and it bounces and they open it up here, then this 76 to 80 is going to have to make a decision. What I would not like to see, I don't want to see ping pong between 80 and 67. That'll frustrate a lot of people, at least through the open. And it's got to make a decision. For the Bulls, it's pretty easy. You got to convert 3,100. And you got to keep going. Otherwise, then you sit back, you wait for the next dip, you buy it. But once you get back up there, you're going to have to deal with it. So I'll be interested to see if we get back into another, double top or matching high kind of situation. Getting back through that 3,100 area is going to take some doing, in my opinion, unless they can launch it through on news. And don't forget the initial pop through through weekly pivot at the close was right here, was that Powell speech. And they did a pretty good job of holding it. They tried to take it back overnight, but once they grabbed it back yesterday, that was it. It was a little choppy off the open yesterday. Then it was just a buy against that weekly pivot, and you ended up in. You can't technically call it a trend day, but price trended up most of the day. The AD was a little weak through most of it, but it got the job done. So watch out for 76 to 80 off the open. Okay, everybody have a fantastic day. Be safe, be healthy, take care. Trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.